attendees are in listen-only mode.
Good afternoon or morning, everyone, depending on where you're at. Thanks for taking the time to be with us today. My name is Joe Corio. I'm the Senior Vice President here at URL Insurance Group, and we're very happy to have you on the line with us today. For those of you who are doing business with us, we want to first of all extend a big thank you for all your continued support and all the business you've given to us over the years. We know that you have choices of where to place your business, and we appreciate the fact that you work with URL. For those of you who are new to URL, we welcome you. URL is a full-service broker. We offer a full line of annuities, fixed and indexed, single premium life products, traditional life products, individual and group products, and a senior division for MedSup and MedAdvantage type products. So please feel free to check us out on our cutting edge website. That address is www.urlinsgroup.com. You'll see everything that we offer, and you can check us out and see what we're doing other than the annuity and single premium life area. Now today I'm very excited because we have a great program for you. As Senior Vice President here, I oversee the annuity and the single premium life division at URL. And frankly, the fixed annuity business, and especially more specifically the indexed annuity business, has been booming for the last 2 to 2.5 years. People are realizing the benefit of upside potential with no downside risk, and that's really generating a lot of activity. But the truth is that sometimes there's what I call sideline money, whether it's savings accounts, CDs, or other funds that aren't needed for everyday living. And sometimes these funds can be better utilized in a life product with a rider for living benefits. They may better suit the client's needs, especially as they reach those 60s and 70s and even the 80-year-old age brackets. So single premium life in the last year has really been taking off as a great complement to the annuity business. And there are 2 such products today that we're going to talk about from Baltimore Life. And we are very fortunate to have Mr. Gary Voigt, the Vice President of Corporate Marketing and Communications at Baltimore Life, with us today. And he's going to review the products and to discuss how they can benefit your clients to the maximum available. Now, before I turn it over to Gary, just a few housekeeping notes. We do have the accessibility to answer questions. So as you see on your screen, you can type in the message. And at the end of the presentation, we will be answering those questions. And also you can call us here at URL. We'll be glad to answer any questions that you have after the program, or to get you a specific proposal for any business or any clients that you might have in mind. Our toll-free number, if you want to write it down, for URL is 800-926-8875, and my direct extension is 102, or you could talk to my assistant, Maria Adams. She's an expert in the single premium life and annuity area, and her extension is 102. Excuse me, mine is 111. Okay, without any further ado, I am going to share the screen and turn it over to Mr. Gary Voigt.
Thanks so much, Joe, and good afternoon, everyone. I want to thank all of you for investing some of your very valuable time today to learn more about Baltimore Life's tax-efficient asset transfer program. These are products for your clients who, like Joe said, have some sideline money they'd like to leave behind. We call it leave behind money they'd like to leave behind, not necessarily live on. And they want to do it, though, in a much more tax-efficient way by paying a single premium and providing a much greater income tax-free death benefit. We're going to be talking about 2 products today during our session, our Generation Legacy and single premium whole life product. Both these products are designed to take those single premium funds. One product is designed to take annuities and qualified funds, and our single premium whole life is designed to take after-tax fund, after-tax cash funds to provide that increase in estate value for your clients. In our session today, let's talk a little bit first about the marketplace. We're going to be talking about product, the market, and also getting into some marketing and sales ideas. But the market is absolutely huge. Roughly $1 to $3 trillion in wealth is being transferred each and every year between now and the year 2052. We know that about 55% of your clients' wealth is being passed on to their family members, and about 16% of that wealth is moving on to their favorite charities. So yes, 71% of your clients' wealth is moving along to people and organizations they know and love. The question is, are they maximizing the amount of money they're passing along, and are they doing it in the most tax-efficient way? Well, the first product we'll talk about is our Generation Legacy product, and as I mentioned, this product is really designed to take single premium funds from either non-qualified deferred annuities or other qualified plan funds that are not needed for daily living, thus allowing your client to create an estate, a legacy, if you will, and increase their estate value for their family. The issue age for the product is 60 through age 80, and this product very uniquely combines a single premium immediate annuity along with a limited premium payment whole life product. One application issues both products, and both products are seamlessly administered together by Baltimore Life for the benefit of your client. This product also goes through simplified underwriting through 4 tables. We'll talk about that. As well as Joe had mentioned, we automatically have, in all states where it's approved, that's the high majority of our states, we automatically include our accelerated death benefit rider, which truly can provide your client with cash at a time when it's needed most. So let's look a little bit at this qualified marketplace. It's huge, $2.3 trillion of in-force deferred annuities out there. About 60% of the money is in tax-qualified plans, IRAs, 401ks, and the like, but about 40% of that money are in non-qualified deferred annuities, products that you sell, that you have in your book of business. And if you go to those clients and you ask them simply, you know, what is your goal with that money, most of them will tell you that it's just money they're planning to pass along to the next generation. An annuity, fabulous product. We sell them. Great growth, tax-favorable growth, but it also is a great product to generate a guaranteed life income. Unfortunately, many people, many of that group, never, in fact, ever use it for income purposes because their only goal is to pass that money along. So knowing that a significant share of the money is going to be transferred for the next generation, is the annuity the best solution? We know that if you let qualified money sit around until age 70.5, there is a required minimum distribution that kicks in. And of course, at death, that money that is taxable, the gain, in effect, is passed along to their survivors. So is the annuity the best product to die with if your only goal was simply to pass it along to the next generation? Well, Generation Legacy, let's think of this product or any single premium product as a gift you're going to be passing along to the next generation. And with Generation Legacy, you're going to be transferring qualified funds from an annuity or qualified plans. You can do a partial withdrawal or transfer or a full transfer of those funds. Inside the gift box, with a single app, as I mentioned, we'll issue 2 products, a SPIA, along with a limited premium payment whole life product. Now, over a period of either 7 or 10 years, the SPIA, we will make annual payments from that SPIA on the client's behalf to pay premiums on the life product. Nothing for the client or the agent to do. What dictates the payment pattern? Well, it's the issue age. If the client's 60 to 74, we'll issue a 10-year SPIA along with the 10-year limited premium payment whole life product. The client's 75 to 80, a 7-year SPIA along with the 7-year whole life product. Now, here's where the great feature of this product comes into play. What if the client were to die during the 7 or 10-year period while the SPIA is around paying for the life insurance? Well, we know the life insurance will always pay an income tax-free death benefit that's much greater than the single premium paid. But in our product's case, we will also pay the remaining payments from the SPIA to the named beneficiary. So there's not really any products out there that are doing and are designed like this to be able to pay both. So you're seeing the life benefit income tax-free as well as the remaining payments from the SPIA. We'll talk a little bit later about those remaining payments from the SPIA on the tax side. So at the end of the 7 or 10 years, the gift box is complete. We have a paid-up life product that continues to pay an income tax-free death benefit. It continues to grow cash on a tax-deferred basis, and yes, continues to provide the accelerated death benefit rider on that product. So the issue ages 60 through 80, and we base our pricing on current age or age at last birthday. Now, the reason this is important is when you write these products, you're going to be transferring funds from other institutions and their products. That transfer might take 20 to 35 days, let's say. But, you know, it's based on the date we receive the funds, and the client's age at that time is the age we will issue at. So if, you know, if the client's close on a birthday, please be mindful that it's based on the date we receive the funds, and that'll dictate the issue age. Minimum premium, it's only $5,000. How many clients out there that you work with have small $5,000, $10,000, $20,000, $50,000 annuities that their only goal is to pass it along? I will tell you that the average premium we see on this product is about $60,000 to $65,000. The maximum face amount for the life product, based on the single premium paid, is $450,000. Now, we have two underwriting classes, non-tobacco and tobacco, and through simplified underwriting, we'll issue any risk in those categories, standard through Table 4. The cash values, they accumulate in the life insurance product on a non-participating basis. Partial surrenders. You are permitted to take partial surrenders from the life insurance cash value after the life product becomes fully paid up, 7 or 10 years. Loans, they're available at any time from the available cash at a maximum interest rate of 8%. So now let's get into these accelerated death benefit riders. The key thing to remember in selling any accelerated death benefit rider with any company is that you never should be selling it as a long-term care policy, of course. Long-term care insurance is the best way to go if you want great long-term care benefits. But certainly, as you know, most seniors can't afford long-term care insurance. Isn't it great to know that through these riders, they can accelerate the death benefits of a life product to help with their end-of-life expenses and have no restrictions on how that money is to be used when they take the money out. So there are 3 health event triggers that allow you to accelerate the benefit on this product. Terminal illness, confinement to a qualified nursing home facility, and in situations of extended care, home health care, and adult daycare. It does increase the liquidity of the life insurance product that it's attached to, and upon the decision to accelerate, which can happen any time after issue, a lien for the amount of money you've taken will accumulate at an annual rate of 8%. Now, the maximum you can accelerate is $250,000. The minimum is $5,000. But the good news is the benefit is paid out once, and it's paid out in a lump sum. So that way your client really has that cash at a time when they need it. So now let's take a look at the definitions of these triggers and the percentages of payouts. The first is terminal illness, and here the client would have to be terminally ill with a life expectancy of 12 months or less. And they could take up to a 75% death benefit or acceleration of the death benefit from the life product. What about qualified nursing and extended care? This is under one rider, and again, the client would have to be chronically ill, confined to a nursing home, qualified nursing home, continuously for 90 days with the expectation of a permanent confinement. Here they could accelerate up to 50% of the face of the life product. For extended care, they need to be chronically ill, been so for 90 days, but now they're requiring care provided by a licensed home health care agency or a licensed or state certified adult daycare. And here they could accelerate up to 50% of the face. Now, knowing that we're talking with probably a lot of agents in the state of Pennsylvania, those percentages are slightly different in Pennsylvania. You can accelerate at 65% for terminal illness and 40% under either qualified nursing or extended care. That same rule applies in the state of Indiana, but all other states, are the percentages we showed. So you can clearly see here that the riders are designed to be able to provide cash now, but in most every case provide remaining death benefit. So what is the definition of chronically ill? If the client satisfies either of these definitions, we consider them chronically ill. First is they can't perform 2 out of 6 activities of daily living that you see on the screen. Maybe they're okay on their ADLs, but possibly could be suffering from a severe organic mental illness, such as Alzheimer's or dementia. In either case, we consider them chronically ill. So just to recap, upon the decision to accelerate, a lien for the amount of money plus a $100 service fee will accumulate at an annual rate of 8%. Upon the insured's death, we simply take the face amount less the lien and the interest. That gives you the remaining death benefit. One thing to remember, since you could accelerate this benefit anytime after issue, if it's during the period of time while the SPIA is around, paying for the life insurance benefit each year, we'll still accelerate the benefit, but we will also still make annual payments from the SPIA to the life product until the life product either becomes paid up or the client dies and we pay the remaining death benefit. So here's some examples of how this might work. Client's terminal on a $100,000 face amount life policy, and they decide to take the maximum acceleration, which is 75% or $75,000. Now, if they were to die immediately after getting that cash payment, their death benefit would be $100,000 less the original lien, giving you a total of $24,900. So in this case, since they died immediately after getting the money, there was no time for interest to accumulate on the lien. But the more likely scenario is this one, and that is they die 1 year after accelerating the benefit. So they still got their $75,000 in cash, but now the remaining death benefit would be $18,892, which is the face less the original lien plus 1 year's worth of interest. These riders, as I mentioned, are really designed to pay cash now but still have death benefit remaining. And in this case, the client would have to live roughly 4+ years for the interest to outrun the remaining death benefit. Very, very unlikely. And that's why with nursing home care and the extended care triggers, we have that payout at 50%. So when would these riders actually terminate? Could they terminate from the policy? Well, if for some reason you stop the whole life policy, and you might think to yourself, how could we stop the whole life policy if the SPIA is paying it each year automatically? Well, let's use this as an example. A client comes to you with $50,000, says, I want to get this thing started. This is all leave behind money. And 2 years later, into a 10-year plan, says, well, I ran into a problem. I need some money. So what you could do is you could terminate the life contract. There would be very little cash value there. But then you could have the remaining 8 years of the SPIA paid to that person as income. But if you do that, of course, the accelerated death benefit goes away. If the client dies, we pay a death benefit instead. And the third reason would be if the client accelerates, let's say under the extended care provision at 50%, you can't come back later and accelerate again. You can only accelerate once. The other very odd situation might be, what if the lien exceeds the remaining death benefit? Well, the policy would terminate. That would be the scenario where the client is terminal and lives over 4 years after they got the money. Very, very unlikely. In that very unlikely scenario, the owner has an option. They can repay all or part of the lien at any time to keep it qualified as a life product. Keep in mind that we still have cash value accumulating in this product even though you accelerate the benefit. And you can never have a loan and a lien going on at the same time, one or the other. The last thing is, no matter whether you're accelerating our benefit or any company's similar rider, please make sure you tell your client to consult with their tax advisor, because technically these benefits may, and the key word is may, be considered taxable as a living benefit. So here is a quick example of a payout of an accelerated death benefit rider. The client, female age 70, non-tobacco user who has $50,000 in premium, would yield her a face amount on the life product of $78,000, nearly $451. Now, if she was terminal and wanted to get at some of that cash to living benefit, we could pay out nearly $59,000 to her. If she were in a nursing home or an extended care situation, she could get at just over $39,000 worth of cash, still having remaining death benefit. So this is real money to someone at that age who needs money for end-of-life expenses or for any reason. They're not restricted on how those funds are to be used. So we know the first tax efficiency of this program. Single premium goes in, income tax-free death benefit is provided, much greater than that single premium. But here's the second tax efficiency of this program, and it's how you deal with the transfer of your funds. If you were rolling over an IRA where none of the money's never been taxed before, or if you're rolling over an annuity where there's a cost basis and a portion that has not been taxable, eventually Uncle Sam has to get paid, right? But when you roll this money into the SPIA portion of this product, and we start it there, since we're going to be using it as premium over a 10 or 7-year period, we're able to spread the tax on that gain out over the same 10 or 7-year period. So the client will get a 1099 each year on the taxable portion, but they're able to spread the money out and that gain out over that same period of time. So if you were using qualified funds, it's good to know that the SPIA payment we make each year to the life product does satisfy the RMD rules. That's a good thing. And the last thing to know is that at death, we knew the life insurance was income tax free, but the remaining payments from the SPIA that are paid to the Benny, they would be taxable based on the portion that's never been taxed before. So if it were IRA money and you had remaining SPIA payments, all of that would be taxable income. Now normally we would pay this money out on an annual payment basis. So if there were 8 more years remaining in that SPIA, they would get 8 more years of annual payments. Or the client could say, you know, the beneficiary could say, I don't want it annually, give me a lesser commuted lump sum. We could do that as well. But in either case, we would give them a 1099 based on the distribution. The uncle eventually has to get paid. So the last thing on tax to talk about is the application. Since we're rolling over money from qualified plans, we have to ask the question if the client wants to do withholding for tax. But the way we've designed this product is that we cannot do that. We'd actually have to send the app back to you. The math doesn't work. The client doesn't get the advantage of spreading the tax out over 7 or 10 years. So as a result, we need you to check on the application that you do not want tax withheld from the annuity you're rolling over. So now let's take a look at premiums to death benefit. And I want you to be thinking about those annuity clients, especially out there that you have, that just say, I just want to pass it along. It's sideline money. Here's the 65-year-old, has $50,000 in sideline money. And because they're 65, we're going to issue a 10-year SPIA along with the 10-year life product. For the male, the face amount would be $77,361 and change. For the female, the face is $87,031. So what did you just do for that female 65? Well, you immediately increased her estate value by over $37,000, keeping in mind that if she dies during the first 10 years while the SPIA is around, the remaining payments from the SPIA would also be paid. Now, if she says to you, Joe, if I was in a 25% tax bracket making 3% interest on my money, maybe I should be better keeping the money in the annuity. Well, it would take her over 19 years just to accumulate the $87,000 plus that would be paid from the life contract income tax free. If that same money were in a taxable investment, it would take her 25 years to do the same thing. The beauty of what you sell, life insurance, means that you always will have an $87,000 plus income tax-free death benefit. What about the 75-year-old? A little older, a little shorter life expectancy, but the numbers still look good. At 75, the client, we would issue a 7-year SPIA along with a 7-year life product. And for the male, that face amount would be $61,516 and change. And for the female, the face would be $67,000, nearly $9. So for that female, you've increased her estate by over $17,000 at age 75 with leave behind money. And for the male, you've increased his estate by nearly $12,000, knowing that if they die in the first 7 years, the remaining payment from the SPIA would also be paid. So with that, I'm going to show you an example of a ledger of how this might look. And this is just kind of a snapshot of part of our proposal software. We have online proposal software that you can get to on our agent website. And then we also have our mobile link software, which is just basically something you're going to put on your phone or your smart tablet. And you can get to that by going to mobile.bultlife.com. I'll show you that more later. But here's the 7-year-old female, non-tobacco user, who has an annuity with 50 grand in it. Her cost basis, her money is 40,000. So in column 3, you see the transfer of 50 grand going in. Out of that $50,000, we would make an automatic annual premium from the Speed of the Life product of $5,570. Out of that premium, the amount that's excluded from tax, part of her basis, was nearly $4,000 a year, but the amount of estimated taxable income that she would get a 1099 on is $1,571. Now, if she were to die anywhere along the way, the death benefit is $78,451, and of course, if she dies in the first 10 years, there's the commuted lump sum of the remaining payments from the SPIA in the next to last column. So this ledger really gives you a good ebb and flow of how the product works, and it clearly points out everything to your prospect, including the very important number to make sure they understand that they will get a 1099 each year on that gain portion. So what about forms? How do you start selling this stuff? Well, if you go out to our agent website, you're going to find we have product toolkits for every product you're contracted for with us. So if you go into the Generation Legacy product toolkit, you're going to really find everything you need to sell and market the product through us, including our printable application and forms package. You answer a couple of quick questions, and it's going to automatically populate for you the forms that you need to do business. It will also give you a set of instructions that will tell you exactly how to submit your business to us, but it will take you through the instructions to do what we call our point of sale underwriting interview. This is where, as soon as you finish the app, you can call our call center with your client and complete an interview in about 12 minutes or less. And we're going to be able to tell you over 90% of the time the decision on that case. We're doing live underwriting on these cases. Beautiful process. We'll talk more about it in a moment. In the toolkit, you're also going to find a lot of other great marketing tools. Our agent guide, instructions to get to our mobile link software, our proposal software, 4-color client brochures, customizable marketing flyers, point-of-sale presentations, letters, phone approaches. Everything is out there for your use. I'll do a little show and tell of that later. So let's talk now about the second product. That's our single premium whole life product. Very similar goal in mind, right? A client who wants to leave a legacy, increase their estate in a tax-efficient way. But there's some key differences with this product. The first one is single premiums for this product are originating from after-tax cash funds not needed for daily living. That's sideline money again. But money in CDs, money markets, mutual funds, and where appropriate, 1035 life-to-life product exchanges. The issue age, a little bit different for this one, ages 50 to 85, a little broader issue age as compared to Generation Legacy. This product has simplified underwriting, but with this one, we offer it out through 8 tables. We have a second tier of underwriting that we'll talk about. And finally, our accelerated death benefit rider has the same 3 health event triggers that I described for Generation Legacy. The difference is with this product, that it, first of all, doesn't have a reduction for Pennsylvania, for those of you in Pennsylvania, and it also will allow you to maximize the accelerated amount and have no remaining life insurance. I'll show you that in a second. So 50 to 85 are the issue ages based on current age or age at last birthday. 2 tiers of underwriting. You can either go non-tobacco, tobacco, standard through Table 4, identical to what you had with Generation Legacy. But with this product, we have a second level for tables 5 through 8. So some of your more challenging health conditions like diabetes would be able to be issued normally with this type of product. Minimum premium, it's only $5,000. How often do you run across clients that have CDs and money market accounts with $5,000, $20,000, $50,000 of cash that their only goal is to pass that money along to the next generation? Seniors do a good job of compartmentalizing their money. How about those senior clients you run into that say to you when you're trying to sell life insurance, Joe, I really don't need any life insurance because I have a burial account set up. Well, that means one of two things. That either means they have a pre-arrangement with a local funeral home, or it might mean they have a $15,000 CD set up at their local bank that their kids know that's the money set aside to bury them. Well, here's how that might go. Mrs. Jones, you're 70. You're going to live many more years. What if I was able to show you a way that you could take that $15,000 and provide close to a $25,000 income tax-free death benefit? Oh, by the way, if you became terminal in a nursing home or extended care situation, you could get at some of that money as a living benefit and still, in most all cases, have remaining death benefit for your family. So that's what we call the burial account concept. There's so many agents who have never sold any type of single premium business before and might be selling final expense business. That's the way they got started with this. And they sell the 5s, the 10s, the 15s, but then they start figuring out very quickly that to get good at this type of business, you have to do good, effective fact finds and find the money. The average premium, by the way, we see in this product is about $30,000 to $35,000. Now, the maximum face amount for this product is expressed in terms of the maximum net amount at risk. That's the difference between the face amount that we issue and the premium paid. So they're based on age and underwriting levels are the maximum net amount at risk. Cash values, they accumulate in a non-participating basis in this product. But here's another key difference. Partial surrenders are permitted from our single premium whole life product within limits starting in the second policy year. So you never want to sell this with the idea that it's like a bank account. You can take money in and take money out, put money in and take money out. You want to be selling it more on the idea that they're trying to leave a legacy and increase their estate. But as you know, many seniors think, oh, God forbid, what if the sky falls and I need some money? Can I get at it? And yes, you can. Starting in year 2, you can take a 10% partial withdrawal, year 3, 20%, 30% in year 4, 40% in year 5, and from the 6th year on, you can take up to a 100% partial surrender from the available cash value. Loans are available. Really don't know why you take a loan when you have that partial surrender capability there. The accelerated death benefit rider, same 3 health event triggers I gave you for Generation Legacy. But with this product, the key difference is, again, it can be paid out once. It's going to be paid out one time in a lump sum. They can use the money for whatever purposes they need. But with this product, they can say, you know, I don't want any remaining life insurance. Let's maximize the accelerated cash benefit and have nothing left. They can do that. Or they can say, let's leave a certain amount of life insurance over here, and I'll accelerate the balance of the money. So here it is. Here's terminal illness. It's the same definition to qualify, but now they can say, give it all to me, give me as much as I can get, and they can accelerate it 95% of the face amount, less a $250 admin charge. Or, as I mentioned, do a partial acceleration, leave some life insurance, and accelerate the balance at these percentages. The second one is for qualified nursing, same definition to qualify, but here, because they're going to live longer, the maximum acceleration rate is 90% less the admin charge. And for extended care, same definition to qualify, but because they're going to live even longer, the maximum acceleration rate is 80% less the admin charge, or again, do the partial acceleration. For chronically ill, same definition to qualify, 2 out of 6 activities of daily living, or someone suffering from a severe organic mental illness such as Alzheimer's or dementia. But here's the meat on the bones. This is the examples of premiums to death benefits. 65-year-old non-tobacco user has $50,000 in leave behind money. For that male with $50,000 at level 1 underwriting, we'll issue a face amount of nearly $82,000. And for the female, a face amount of just short of $93,000. Wow, what a bump in her estate value in money that was only meant to be sideline money. Let's not forget, with this product, you have a level 2 of underwriting, tables 5 through table 8. And across the board, based on all ages and genders, you're going to see average a reduction in face amount of $5,000 to $6,000 at level 2 as compared to level 1. Not a bad reduction considering that underwriting level is being made available. So what did you just do for the female 65 who had $50,000? you increased her estate value by nearly $43,000 with her leave behind money. And if she were in a 25% tax bracket making 3% on that CD, good luck with that one today, it would take her 28 years to accumulate the nearly $43,000 you increased her estate by. Knowing that the life insurance is always going to be paid income tax-free to her beneficiary at just short of $93,000. Here's the 70-year-old, a little older and shorter life expectancy, but the numbers still look good. With the same 50 grand, the male at level 1 underwriting would get a face of just short of $74,000 in face, and the female just over $82,000. Again, the reduction at level 2 underwriting is about $5,000 to $6,000. So what I will tell you is that when you look at this, if you put $50,000 in this product as compared to $50,000 into Generation Legacy, this product will yield a slightly higher face amount. So just be aware of that. All right, the forms, same story. Go to the single premium whole life application and forms package, answer a few questions. It's going to generate your forms for you. We have a bunch of other great marketing materials out there for you as well for this product. So let's talk about what I think of as the icing on the cake for this product, because it's a great product, you know, great benefits, great comp, everything is good, but what makes this even better is our point-of-sale underwriting process. You finish an app, you get on the phone with your client in our call center, and in about a 12-minute interview, we're going to be able to tell you over 90% of the time that this case is approved or not. You know, we reject very few of these cases, but, you know, we will tell you whether or not it was a decline. But the good news is we're not going to communicate the decision to your client. We're going to communicate that to you. We'll talk about that. Now, when you do this interview, we do this interview with your client, we're asking them the same health questions that you completed on the paper app. The difference is, when we're doing live underwriting, is that we're also looking at the MIB information as well as the prescription drug database information. That way, if there's any conflict on that data as compared to how they answer the app questions, we can get clarity right then and there. That's why we're doing live underwriting. So after the interview is done, as I mentioned, any underwriting decision will come to you, not your client. You're the one that will communicate that to your client. Also, we will give you a confirmation number that we ask you to write on the first page of the app you're going to submit. When you get back to the office, get all the forms to us. That'll all be in your application and forms package, all those instructions, as well as instructions of how to contact the call center. Here's the phone number and the hours for the call center. The key thing to remember is that we support traditionally English and Spanish languages. Other languages are available upon request. If you have a hearing impaired client, we have TTY services in English and Spanish. The key thing is that this interview must be completed within 5 days of completing your application. Now, you might be thinking to yourself, well, what if I see your call center's not open on Saturday, or I'm on the West Coast? What if I'm writing the client after hours? What do I do? Well, no matter when you write the business, you always want to start the call of the call center simply by leaving your name and number, the client's name and number, and a date and time you want us to call them. We will contact them, get the interview done, and again, call you back with the underwriting decision. During normal business hours, everything gets done at the same time. Life is good. And by the way, we pay commissions here twice a week. So as soon as that approval goes in, that case is issued, you have a chance to get your comp twice a week here at Baltimore Life. What about pre-qualifying the applications? Well, we have an app for each product, and the reason is, for Generation Legacy, we have that standard through Table 4 one tier of underwriting. So as a result, we have a Part A section. Part A on the Generation Legacy app simply are knockout questions. If you get a yes in Part A, it means your client does not qualify through 4 tables of underwriting. But if you get all no in Part A, with good height and weight, drug history, and MIB history, we're going to issue your Generation Legacy product. For single premium whole life, it's 2 tiers of underwriting, so we have 2 sections of questions on our app. Still think of the Part A section as knockouts. If you get a yes in Part A, it means your client would not qualify through 8 tables of underwriting. But all no in Part A and B, along with good height, weight, MIB history, will get you standards through Table 4 type of underwriting. If you get all no in Part A, but 1 yes in Part B, with everything else still looking good, we will issue Level 2, which is Table 5 through Table 8. So with that, I'm going to make a quick transition in my slide deck, and I'm going to get into showing you the information about our marketing. You open that up. Here we go. So I've talked about our product. I've talked about the market. I've talked about the great point-of-sale underwriting. What about helping you with some of your marketing? Well, the first thing I'd recommend is get on the phone and call URL, because their internal team are going to be the absolute best support for you in helping you with case development and answering questions you have. They're absolutely super. They're one of our premier organizations, so please make sure you contact your friends at URL. But out on our agent website that you'll have access to, we have product toolkits set up for every product you're contracted for with us. And inside those toolkits that look like this happens to be Generation Legacy, you're going to find really everything you need to sell and market our products, including that application and forms package and a number of other things, which also includes on-demand training. Let's go through a few of these things right now in the time we have remaining. The first thing is our mobile link software that I alluded to earlier. Write this one down, mobile, M-O-B-I-L-E, .baltlife, B-A-L-T-L-I-F-E.com. So mobile.baltlife.com will take you to that center panel that's on the screen in white. That's the Secure Solutions mobile link software. And if you're on your smartphone doing it, go to your settings button and you'll get an option of saving that page as a link to your phone, and it will create a little shortcut on your phone with a ship on it. When you're in Mobile Link, basically it's like having an agent guide in your hand, but a lot more. You can get the product information, the underwriting information, but we have a rate and value calculator in there for Generation Legacy and single premium whole life. You can simply turn that phone or tablet around to your client and basically have your proposal software in front of them and do it very quickly. On Mobile Link, we also have our final expense product, SilverGuard, as well, with the same features. But it's a great tool. I use it myself, just used it a couple weeks ago with a neighbor of mine. They were asking about, I was talking to them about this idea because they had money in a CD for their grandkids, and I talked about this. I pulled it up, and they said, well, how much benefit could I get? Bam, it was right there in the palm of my hand on my phone. Another tool on our toolkit is something called Secure Solutions Presenter. It's basically like having an electronic track book with you. Any of our product presentations are out there and some other financial concepts. So you can work with your client in viewing that presentation at point of sale. You can print it if you don't work with a laptop, or email it. But here's an example of what a presentation might look like. Very visually appealing. Explains the concept of asset transfer and who it will benefit. It will give you good key dialoguing questions to be asking. It gives the features and benefits of the product. Then with Generation Legacy, we show how the gift box concept, how two products really work together as one. We show an example based on different ages and genders, how you can get that bump or increase in estate value with the single premium. We show the accelerated death benefit rider and how it could pay out. And that just gives you a good flavor for what those presentations look like. And again, we have that presentation available for any of our products, of course, including Generation Legacy and single premium whole life. So now let's take a look at another form that's out on the site, and that's our asset transfer analysis form. I talked about fact finding. It's so critically important to find the money, and if you need some help on that, this form can do it. The center of the form allows you to record the client's current assets, and CDs, money markets, annuities, whatever, and you can quickly show on this page, if they transfer a portion of those funds into one of our products, the increase that will make in their overall asset or estate value. The bottom of the form allows you to record their current income, so you make sure they have enough income before disturbing those funds. At the top of the form gives you those key questions to be asking, one of which is, Mrs. Jones, do you have money that you would like to leave behind for your family or favorite charities that are not needed for daily living? Well, most people get the leave behind money concept, and if they don't, it's going to create a great conversation starter for you. This screen is representing another document we have on our site. It's called Single Premium Sales Ideas. And each of these bullet points give you a full set of details on this particular sales idea that is bulleted on the screen. When you print this out and read it, what I'd recommend that you do is have a blank sheet of paper beside you, because you're immediately going to start thinking of clients that you can go out and see tomorrow that, in fact, would fit some of these ideas. What about all those clients that have annuities in your book of business, that their only goal is to pass that money along to the next generation? Great prospect for generational legacy. What about some of those older paid-up life policies where the cash values are close to equaling the death benefits? You can, transfer 1, 2, or 5, or 10 of those policies into this product and bump up that client's death benefit. What about some of the old ULs where the cash values are going in the wrong direction? If you can rescue at least $5,000 of premium, you can 1035 exchange that UL into our single premium whole life product. We talked about the burial account concept earlier. One of the best ways I can tell you that new agents get started into the asset transfer market. So lots of great ideas. Take a look at that document. We also have these customizable marketing flyers out there for your use. It explains the concept of asset transfer, features and benefits of the solution, and then you can customize the form right here online and print as many of them as you need. I've seen agents print a bunch of these out. They use the Secure Solution Presenter presentation I showed you earlier, buy some coffee and donuts and go down to the local senior center that, they're the ones that go out on field trips and take computer classes, not the assisted living centers, but the senior centers, and they do a 30-minute stand-up on asset transfer. Works very well. We have print ads that you can use. We have letters. We have phone approaches. We have third-party marketing articles. All this can be found, again, out on our agent website inside of our product toolkits. So with that, Joe, that is the presentation for today. And first of all, I want to thank everyone for joining us, and we're willing to take some questions here.
Thank you, Gary. Great presentation. Great product. I do have one question here that came. On the mobile app, does an agent have to have an agent number in order to download that, or?
That's actually the beautiful thing. No, you don't. Just simply mobile.vaultlife.com. You can do it on your cell phone, your smart tablet right now, and that page will come up for you.
Okay. And I think, Gary, that's the only question that I really had here. So there is a poll question on the screen. If you would like us to follow up with you after this webinar, put yes. If not, no. We know your time is valuable. And we know that certain instances you're not ready to use the product, you just want the information. But for those of you who want to know more, maybe you want to get the forms emailed to you, or you want a proposal for a specific client you have in mind, just put yes on this thing and submit it, and we will contact you in the next 24 hours. Other than that, I do have another question coming in. Living benefits, are they in Florida, Gary?
Yes, they are.
Okay, great. And are they at the full 75%?
In Florida, they are, absolutely.
Great. How come Florida's got better benefits than PA?
Pennsylvania is a very conservative state. They, when you look at that, the goal is never to have the death benefit run out, and Pennsylvania tends to be a little bit more on the conservative side by fronting or paying in cash a little lower living benefit and still making sure there's some remaining death benefit.
Okay. Great. Again, our toll-free number is 800-926-8875. My extension is 111, or Maria Adams is 102. We'll be glad to answer all your questions.
Thanks so much, Joe. Appreciate everybody being on the call today.
And thank you, Gary, and look forward to working with everybody. Have a great day.